Hi everyone. So I'm going to talk about the Megatrends portfolio. But before that, a short introduction about myself. So my name is Yuhan and I'm an investment lead at Endowus. And joining me today in talking about the Megatrends portfolio is our Chief Advisory Officer, Wei Mei Tan. So I'll pass on the time to her to do a short introduction of the Megatrends portfolio. Wei Mei, please.
Thank you, Johan. Hi, everyone. Now I'm going to share with you how we have constructed the Endowus Megatrends Satellite Portfolio. It is a 100% equities-only portfolio, and we have chosen 6 different funds. And it covers all the different megatrends that are going to be powerful driving forces that have the potential to reshape the way we think and live by changing the global economy, businesses, and the environment. So the portfolio has got a very diverse geographical exposure, and it has got meaningful allocation to both Europe as well as Asia. But clearly, because the US has always been leading new ideas and trends, we should still anticipate that US would be the largest market of all. And consistent with the major themes that we have, the portfolio will have exposure to healthcare, technology, and industrials. The other notable sectors are going to be materials as well as consumer, and that will cover our overall thematic focus, which will be made up of the different funds that are able to allocate across these different sectors. So now let me share with you more depth on what we mean by the key themes as well as megatrends that will affect all of us going forward, and why is it important for you as an investor to participate in these megatrends. So the first one is about quality of health. And it's important as an investor to be exposed to different areas that can cover medical innovation, scientific advancements, quality care, healthy and sustainable consumption. And the second one would be on the quality of the environment. And very importantly, we're looking at clean energy, energy efficiency, sustainable transport, water supply, which can all help make our life a lot better in terms of efficiency and improving the overall quality of the environment. And lastly, it will be about our quality of life. And this will be a wide-ranging list of sectors that can cover infrastructure, digitization, empowerment, artificial intelligence, and also safety. I think safety is something that all of us can allude to it because we want to have safety in many different aspects, especially now in the digital space where we want to avoid anything that can potentially lead to, let's say, data leakage or hackers accessing our personal details. So I think all these themes are going to be very close to your heart and something that you can relate to very well. As we look at the different funds that can help assess all these megatrends, we have chosen 6 different funds that can cover these areas. And the managers themselves have proven that they can convert and translate this thematic focus into actual, solid investment returns. So first of all, we have got 3 main funds: the AB Sustainable Global Thematic Portfolio Fund, second, the Thematics Meta Fund, and third, the Allianz Thematica Fund, who are considered multi-thematic portfolios. So these are the 3 that we have got the largest allocation to, and you will see that they are the ones who will also be able to actively rotate across different themes that are happening in the market. And this will help because we always need to ensure that there are changes that we can capitalize on, and they are the ones that would be first and foremost active in the market to identify what these trends may be. The other 3 funds then focus on a single theme, which we feel can reinforce the broader megatrends that we are seeing. And that would be the BlackRock Nutrition Fund, the Schroeder Global Climate Change Fund, and the AB International Healthcare Portfolio Fund. So by putting all the 6 funds together, they are complementing each other, and they are very helpful in making sure that you are going to have a robust exposure to different megatrends that can affect both you as well as me. With that, Johan is now going to share with you why is it important for an investor to invest into megatrends.
Thanks, Mei. So now moving on to the exciting part, which is why we should consider investment in megatrends. And at Endowus, we believe there are three key reasons that make an investment in megatrends appealing. And the first reason is none other than the attractive potential growth rates of the megatrends underlying themes. So as the term megatrends suggests, these are major trends that occur on a large and global scale. Some of these trends are actually already familiar with Singapore consumers, such as the popular digital payment app, Google Pay, and its What Pulse campaign that was actually launched in Chinese New Year. While other trends such as DNA sequencing and digital health data are less obvious, they have nonetheless been rapidly growing as well. And what is actually common amongst each of these mega trends is the huge size of the untapped markets and the speed of the adoption. And as a result, these trends have potential growth rates that far outstrip that of GDP growth. So in this table, we can see that the expected GDP growth for US in 2021 is actually 6.5%. And this number itself is already inflated because of the effects of COVID on 2020. And at the same time, we can observe that most of these megatrends actually have double-digit projected annual compounded growth rates, with the electrical vehicle theme expected to grow at an impressive rate of 37% compounded annually. So on this next slide, we look at things that are apart from these thematic areas which fall into the infrastructure theme, such as the need to upgrade, build new bridges and roads, or even to repair roads and bridges, and to provide clean drinking water as well as the treatment of wastewater. So for example, in this case study of the US alone, we can see that there is an estimated spending need of $6 trillion in the next decade. Out of this $6 trillion, only about $3.3 trillion has been funded, with a spending gap of about $2.6 trillion. So this is actually a very pressing issue, which has led to US President Biden recently managing to get his $1 trillion infrastructure bill passed. And the next attractive proposition of the Megatrends portfolio is actually the diversification and diversification benefits that the Megatrends portfolio will bring to you as an investor. So the Megatrends team actually consists of a wide variety of names, diversified across a few key themes and more than 10 other sub-themes. So in the Megatrends portfolio alone, there are more than 500 names, and many of such names are actually under research or underrepresented by global equity indices. The crowded names such as Meta, Amazon, Alphabet, and Tesla are either not included in the portfolio or only occupy a very small weight. And as can be observed in the table alone, none of the portfolio funds actually have a significant overlap with each other. And importantly, none of these underlying funds have a significant overlap with the broader equity indices, such as the MSCI All Country World Index, the MSCI World Infotech, and the MSCI World Healthcare Index. So what this means to you as an investor is that the portfolio is actually able to provide investors with diversification by investing in relatively under-researched areas, and thus leading to a higher potential of alpha generation. And last but not least, the third key attraction of the Megatrends portfolio is actually its sustainable approach, which has been a key trend in itself, as we all know. And so here I wanted to introduce the United Nations Sustainable Development Goals, which are a collection of 17 interlinked global goals designed to be a blueprint to achieve a better and more sustainable future for all. And according to the United Nations, by investing with the SDG outcomes, investors can actually identify opportunities in business models, supply chains, and products or services, prepare for legal and regulatory developments, protect their reputation and license to operate, consider the materiality over longer time horizons, such as the transition risk, tail risk, and financial system risk, and also to meet the commitments to clients and beneficiaries, which has been an increasingly important topic. So next, we look at the AB Sustainable Global Thematic Portfolio, and as we can see, majority of the allocation is actually invested along the primary SDG goals. So this alignment not only impacts the society and environment positively, but it's also self-serving as it represents an attractive source of alpha generation. And having talked about the merits of why one should invest in megatrends, we now discuss who should be an investor in the megatrends portfolio. So as the megatrends portfolio is something that often catches the general public's attention, there can actually be a substantial amount of hot money chasing returns and thus driving volatility. So one example is actually the solar industry, as represented here by the MEC Global Solar Energy Index. So in the span of slightly more than 2 years, from 2005 to 2007, the MEC Global Solar Energy Index actually rose by more than 500%. But this all came crashing down in the following year when the index declined by more than 80%, as equity markets were actually decimated by the global financial crisis. So the global financial crisis actually provided an opportunity for the solar energy sector, as governments were able to make use of the stimulus package to actually develop the renewable energy sector. So therefore, investors who are looking to partake in the higher growth rates of megatrends, while able to take on more risk, stomach a higher level of volatility, and also have a very aggressive risk tolerance, can consider investment in the megatrends portfolio. So I'll pass the time back on to Wei Mei to discuss why you should invest in the Endowus Megatrends portfolio.
Thank you, Johan. One of the key things when we decide on when we should be investing in megatrends is to look at how is it possible for managers to generate alpha, both from timing as well as positioning. Because otherwise, a passive strategy may sound better. But in fact, in this area of megatrends, it is a lot more challenging, and it is important for managers to have done thorough research. So over here, you see the S-shaped technology adoption curve. And it's very useful to see over the course of the last century or so how new technology has been adopted by humans. So case in point, when we look at the usage of color TVs, it took about 20 years for color TVs to become mainstream. But right now, with smartphones, it took only about 5 years for smartphone to become a household essential. And I'm sure many of you have more than one smartphone, if not 2 or even 3. So the next thing that's important for managers is to decide when is it too early or too late to buy into a specific megatrend. And it will be crucial to identify the right opportunity at the right moment. So first of all, it's always possible to be investing a little bit too early. And when that happens, you would risk the opportunity cost as well as have the difficulty in picking the right companies. So let me share with you a very interesting snippet that I found. Electric cars actually was first developed in 1890, which was more than 100 years ago. And at that juncture, there was actually sufficient interest in electric cars. But electric cars never really took off in the following century. And that was because gasoline prices came down. And Henry Ford was also able to make use of the assembly line, and therefore motor cars came out in a big way, and everyone started adopting a motor car. And electric car actually went into oblivion. So can you imagine if you had invested at that point in time, you're definitely going to be too early. There is no Tesla, and certainly in terms of the trend, it has taken electric vehicles more than 100 years to come to where we are today. Therefore, thinking about when to buy into a trend can be absolutely challenging. The other aspect to consider is buying into it too late, and therefore you risk at buying at inflated valuations. And also the trend could be reaching the tail end of the cycle. So there may be a missed opportunity there. And for many of the institutional fund managers, they do need to define whether the universe is going to be a bit too vague, meaning that it's too wide-ranging, too many securities to select from, and therefore it is going to be, again, very difficult to find the right companies. And instead, you need to find a sweet spot. And that sweet spot can occur when you fully define whether there's a specific user or application that can make use of that particular trend. And you also need to make sure that the trend itself is going to be sensitive to cyclicality that is happening in the marketplace. So this is going to be really important, which is why our portfolio focuses on active manager that we believe can generate the alpha for you. The second thing would be in terms of strong risk-adjusted returns. The managers that are curated in this portfolio are all brand name managers. You have got AllianceBernstein, Allianz, BlackRock, Nexus, and also Schroders, who have come together. And when we look at the quality of the portfolio, we are convinced that this is the right one because in terms of risk-adjusted return, it is very strong. The portfolio has provided annualized returns since 2017 that is higher than the broad MSCI All Country World Index, and likewise also the MSCI All Country World Index for healthcare, while maintaining a similar level of volatility. So overall, we do feel that active positioning versus that of index funds will allow investors to benefit. The managers themselves have got an unconstrained approach, and they can therefore be looking for quality companies that may be under-researched or neglected, and also at the same time be dynamically repositioning the portfolio based on the prevalent market cycle, maintaining buy and sell discipline when investing, and then allowing the portfolio to be defensive, especially when we have got market downturns, and also ensuring that it would be capturing lower drawdowns and making sure that investors will benefit from the upside while being relatively more well protected on the downside. And the third thing I think which is really important is the oversight that we at Endowus is maintaining for your portfolio. The funds, first of all, are chosen on the basis of performance consistency. We also look into key risks that could be happening, be it in terms of a switch in portfolio managers. And we want to see whether there's also any strategy drift as it goes along in terms of its life cycle. And our research will continue to uncover new funds that can add value to the portfolio. And whenever that happens, we will be making a recommended portfolio change and suggesting the changes to you. So I think this continuous assessment will help to ensure that this particular Megatrends Satellite Portfolio will be invested in best-in-class managers and will also be responsive to ongoing developments as well as new ideas. With that, Johan is now going to share with you a portfolio deep dive to give you more details about the underlying.
Right, thanks again, Wei Mei. So next, let us quickly take a look at the portfolio construct. So the Megatrends portfolio actually consists of three core funds as previously mentioned by Wei Mei, which are the AB Sustainable Global Thematic Portfolio Fund, the Allianz Thematica Fund, as well as the Thematics Meta Fund. So the reason why we have chosen these three funds as the core funds are because these funds are multi-thematic in nature. As mentioned by Wei Mei previously as well, the portfolio manager has the ability to rotate, add or remove themes. So by having the significant allocation to these three funds, we are ensuring that investors in the Megatrends portfolio will continuously be exposed to the newest trends while not being dragged down by trends that are reaching the end of their cycle. And supplementing these three core funds are three other funds that have specific single themes, such as the AB International Healthcare Portfolio, the BlackRock Nutrition Fund, and the Schroder Global Climate Change Fund that enhance the main offering of the Megatrends portfolio. And on this slide, we have the Megatrends portfolio historical risk and return that extends beyond the 5-year cycle. So as mentioned by Wei Mei again, over the 3-year and 5-year cycle, the Endowus Megatrends portfolio has actually outperformed the broader MSCI All Country World Index, as well as the MSCI All Country World Index Healthcare. And this 3-year and 5-year periods are actually where most of the underlying funds in the Megatrends portfolio were around. So the reason was because as with trends, they tend to be more cyclical and new in nature. Hence, it's only in the last 5 years or so that most of these funds actually came about. So for periods predating the creation of these funds, Endowus has actually populated the representative historical data that is consistent with our methodology. And finally, on this last slide, we wanted to showcase some of the selected holdings within the Megatrend portfolio. So consistent with our differentiated approach, not many of these holdings are actually familiar household names, yet each of them play a key role in helping to shape or enable themes within the Megatrend portfolio. So one such name is British company Helma, which is a global group of safety equipment companies that makes products for hazard detection and life protection. Another such company is LabCorp, an American S&P 500 company that operates one of the largest clinical laboratory networks in the world. So such companies, while being leaders in their respective sectors, are not as widely owned as the popular tech names. So that brings us to the end of the presentation of the Megatrends Satellite Portfolio. And if you would like to know more about the Megatrends Portfolio, you can visit our Endowus Insights page to find out more about the specific details. Thank you for your time.